Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, February 12th, 2020. I've cut back substantially on the end-of-day market dates, that are focused solely on the stock market. Instead, preferring to wrap those into either videos during the day for subscribers, rightsideofthechart.com, where we cover trade ideas. That's most of what we do. And I've also cut back, on the end-of-day ones. Because it's the market's been going up and up and up lately, and we haven't had any significant technical developments in a while. It's sort of like, let's say you live in Southeast Asia during the monsoon season. You're going to turn on the TV and hang on every word the weatherman has to say. It's going to rain every day, but towards the end of the rainy season, that's when you might start tuning in there. Maybe you want to, finally get out of the house and spend a day at the beach or riding a bike or flying a kite or whatever. So I'm going to get to there. There are some developments worth noting right now, and that's one reason I'm doing the video. And as I also said, is in lieu of just going over the same thing every day on the when I release the public videos for subscribers, in which we usually only cover the broad markets, which again is a small fraction of what I trade, and in fact it's not much of what I've been trading at all. Every trade idea on the site this year and for months heading into the end of last year were all long side trade ideas, maybe with a couple exceptions on pullback trades and commodities or something like that, but I don't think we had any individual stock shorts for quite some time, or index shorts officially on the site. So what I'm going to do before we look at the markets is just kind of, I said I would take try to do an update, pick a winning trade and a losing trade, because it's easy, great to focus on only winners, but the takeaway in trading, and nobody bats 1,000. There's always going to be losers. So we'll talk on, let's start out with well, we can go in any order. We'll start out here today because we hit RIOT, hit our second price target. This is one of our official trades for a 29% profit today. And there's two takeaways from this chart. Number one is the basis of the trade, what my trading style is all about. I look for bottoming and topping quite often stocks or indexes or securities that are either bottoming or topping, poised for reversal. I've heard over the years many say you cannot catch tops and bottoms, and sometimes we'll nail the bottom, but usually I'll wait for some evidence, and in this case RIOT was this large bullish falling wedge. And it also aligned with our Bitcoin trade, which we just closed out. What was that, last week? And that one was well into the double digits. So this one today hit the second target, and here's a couple takeaways from this. What I want to talk about is why I list multiple price targets, because I get the question all the time. We entered this one back here. We waited. The breakout was strong. I was watching it. The breakout went quick. I believe we were already long Bitcoin at the time, and Bitcoin was the basis of this. This is one of what I call my Bitcoin proxy trades. It is not trade hold Bitcoin, but it's related and tends to move with it, just like some of the other ones that we've been focused on lately. So what we did is it ran up quick, and the first target was here. We pulled back, hit that what would have been my first target at the time on the break of the wedge, and I believe I laid that pattern out in advance as an unofficial trade. So waited patiently, got the first reaction off that target, and then we went long right here on the pullback to support. We went long at an entry over 138. I believe that's where it was. I know the entry was at 138. And that I know. And we ran up there and hit the first target. And let me check this real quick. Okay, yeah, I just wanted to make sure. There's so many trades, and between the official ones that I lay out for subscribers, and sometimes I'm in these positions earlier, or I'll layer in, at different points. And on that one, this is the original post. That's when we went long right there at that price there of 138. I'm sorry. And that was back on January 10th. So we waited for the pullback after the initial reaction, waited for the pullback to support, then once again targeting that 150 level. So let me jump back to that chart and show you. So basically what happened there is, let's go to the live chart right now. No, before we get there, we'll stay on this one. So what happened is we hit it again. And the point I was trying to make is, this is why I list multiple price targets. These are where I expect a reaction to occur. And we had almost a near perfect tag at that level there, pulled back, and we were able to sidestep. Let me measure it out for you. For those that are active traders, and I mentioned that you can either hold out for the whole thing, or as an active trader you can book profits and jump out. So back then, after it hit that target, the stock pulled back about 20%. So active traders would have been able to take profits there and then recycle back in on the pullback. I did updates throughout the trade, mentioned it was still constructive. And then the point is, we hit this today again, as I just showed you on that chart. This was posted at the time. We were right at 178. My target's always set just a hair below the actual resistance level. I had resistance up here around 180. And so we hit that 178 level, and I shared my thoughts that I expected a pullback there. I took some profits. And again, so if you look at it today, we'll go to a 1 minute chart here, the live chart. You can see a significant pullback. In fact, when you go up here, here's a 1 minute chart. I'm going to put a line at 178. Remember, I had the resistance just a hair above. I mentioned in pre-market, first of all, for anyone, if you wanted to get out, take profits then. We opened, popped, had the opening order imbalances. It ran it up. Here's the daybreak line right here. So this is the open today. Here's that initial pop, see 10 a.m. right here. And then, so you had plenty of opportunities this morning in there to get out. And what happened is you were able to avert from the high to low. The stock fell after the initial pop 15%. So there's another example of how you can actively trade around these levels. And sometimes I might have multiple targets, and I'll state that I think something may continue on through. And in fact, just the other day, I actually upped this price target from where we're at. We were a little bit lower, so we were able to get about three extra percentage points above our original target. So that's Riot. That's the good. Now let's look at the bad, and that would be, go back here, and we haven't had many, many of the active trades stopped out recently. But we did have one. We've had quite a few, some nice ones this year, all well into the double digits. And that's the other takeaway is, use attractive risk rewards, risk $1 to make $3 or $4. Don't risk $1 to make $1. So the last trade, official trade we had stopped out here was UGAZ. And on that one, I shared my thoughts at the time. They just clipped our stops, and I suspected it might have been a stop rate. I put some notes in the chart here that we still had the divergences that were in place before that were the reason for this trade were still in place. So I said, if you're given a little room, that's something to watch. Watch for a bullish crossover in the PPO. So that one we were stopped out. I had a very heavy beta adjustment on the position. What that means is this is a 3-time leveraged ETN. On top of that, it is in the most aggressive, one of the most volatile commodities out there. So I suggested a 0.25 to 0.35 position size adjustment, meaning take a quarter to a third of what you might normally take, temper it down. So what that does is it reduces your effective loss, the total dollar amount you would have lost on an average trade, down to about 3.8 or 5.3. In other words, you take the total loss, multiply it by a quarter, 0.25%, 1/4 to 1/3, and that's what you come up with. So it did clip our stops, and again, that's the takeaway is, you can't avoid this. The chart was still constructive. You're going to have stops hit, and I stuck with the trading plan only because at that time, sometimes I will extend stops on the official trades or personally. And I said I did myself personally, extended this one out because of what I was seeing here. But there wasn't enough. There wasn't anything compelling. Let's say if we had a bullish reversal candle at that point in time or anything else, I wouldn't have changed out I would have, in that case, possibly revise the stop and widen it a little bit, but I sat tight on it, and so you can see that was just the other day, and we'll take a look at it now. You can see that they did indeed just barely clip our stop, and it went on. Now look, the trade is not hasn't gone on to play out yet. Here, this is it. This is right there. There's our stop. Look at that. And if you factor in the 3-time leverage, that you're talking basis points, just a tiny amount, but that's how it goes. There wasn't really any support on NG. I use the charts of natural gas futures as the primary reasoning for going in. I trade futures myself personally in most cases if it's a commodity, but I use the ETNs because I know a lot of traders out there don't have the experience or capital requirements or know how to trade futures. So we use these ETNs or ETFs. And again, so this was a case where they got our stop, but it did go on. As I said, if you gave it a little more room, the charts were still constructive, and there is that bullish crossover. And so now you take a step back, turn off all these lines, because they were drawn here, but I'm just going to show you what we're looking at. So there's still some potential, but we're not out of the woods yet either. But as of now, you can see it's moving up. There's not a clean downtrend line. Let me just take that away. We had a downtrend line already that was broken out. But what we're looking at is the bullish divergences right here. And also keep in mind that when we entered the trade, it was right here. Let's turn those lines back on. This line here, the downtrend line, and the one below form a bullish falling wedge pattern. Same thing, just like those bearish rising wedge patterns I've been highlighting on the indexes for a while now, and they continue to play out. And we're about to get to those in just a second, because there is something worth noting at this point in time. So we had bullish developments, but as I often say, just like with these bearish developments, bearish divergences, number one, they're not a buy signal. What was a buy signal here, and it was more so a clean breakout on natural gas futures, by the way, but we broke out, back tested. You can see it on UGAZ as well. Started to play out, and then this must have been a bad inventory report or something that knocked nat gas down right there, that big gap, and that took it down. But what it did is it kept this potentially bullish technical posture intact, because we had divergences here, and now we have even larger divergences. Now typically, not always, but typically, the larger the divergences are, the larger the ensuing trend reversal once it comes. So that's where there's still work to be done. I may add this one back as an official trade, and I know a lot of you on the site may have kept that, gave it a little more room. And so I'm not going to get into the levels to watch now. In fact, I posted an update on it at the time we close this out, and another update yesterday. So I'll still post updates on this, and we may add it back as an official trade. But I wanted to say sometimes they get your stops, and I don't regret, in hindsight, certainly not revising the official stop for members. But again, there wasn't enough in the charts. If you've been with the right side of the chart long enough, once in a while I will temporarily suspend or lower stops on long trades. And there are other times that I close a trade out early, even if a stop hasn't been hit, if there's something compelling in the chart. But I find it best to have a trading plan with every trade before you go into a trade. What are you going to buy? Where are you going to buy it? How much of it are you going to buy? Where are you going to sell it? And most importantly, where are you going to pull the plug if you're wrong? And then once you do that, enter a trade, stick with it. Don't second guess it. I can tell you from experience, myself, and I've heard of many other traders, that's where they tend to fail, is they second guess their positions every time it moves against them. So what I like to do is, sit tight. But again, I'm not a completely rigid trader. If there's something compelling, something out there that says, hey, this is a glaringly, you missed something here. This tells you that, or tells me the trade might start to soon go the other way. Maybe there's something, maybe it's an individual stock in a sector. Let's say I'm trading a semiconductor and it's doing great, but then all the other semis are rolling over, and then the semiconductor index breaks support. I might get out of that semi long early, even if it hasn't hit my price target or stop. So that's one example of modifying a trading plan. Again, if there's compelling evidence to do so, and I did not see that here. Okay, and now on to the charts of the indexes. We don't have at this point in time any sell signals. The trend is the near term, and all trends, long and short term and near term, are all bullish at this point in time. But what we have a very clear uptrend line right here. This yellow trend line right here comes off the October 3rd lows. I've talked about that one quite a bit recently. Trend lines like that, even during a strong uptrend, get visited every now and then. Prices need to come back and check it, even if the trend's going to stay intact. That is also a logical target. And so what you have are these little, within the larger uptrend, there's your primary uptrend line, not your long term on the weekly or daily. I'm talking here on this 60-minute time frame, the trend since October 3rd. But you had these little uptrend lines, what I call minor uptrend lines, along the way. and they are usually, if you can align the technicals, especially if you have the negative divergences like you did here at the high on that one. It's not there, I just marked it for you. This was a divergent high right here. If I could draw, it's a line tool, but that would say DH, breakdown, back test, boom. That was the biggest correction since the rally started. We went up here, we had a price channel. This one broke down, and not much. It was very, very small, mostly a correction in time, and we worked our way up this parallel channel. So there's your trend lines. You have a price channel number one right here. There was QQQ was working up, and you broke the price channel, but what you did from there is you back tested it from low in a parallel channel, very well defined, and then boom, once that broke, you can see you had a negative divergence at the high on that channel before it broke down, and then boom, this was the second biggest correction since this rally off the October 3rd low started. So where we're at now, let's zoom in a little tighter. We've come full circle. We don't have a price channel, although maybe you could draw one. I hate to force it. This is a line I think is more important. It's not a super well-defined trend line. What do I mean by that? Well, you don't have as many reactions as this one. This one you had a lot of candlesticks, on or around that trend line there to help define it. Here you have enough to make it a valid trend line. So let's watch this. I think it fits better than any type of, if I tried to draw a price channel like this. Again, I don't try to force things. Just because we had a couple price channels before, parallel channels, doesn't mean that that's going to always be the case. In fact, it usually isn't. So what we do have are negative divergences. Here's your divergence, a little small one here on the RSI. Actually, no, take that back. Divergence, you either can make lower highs on the indicators, as you have here, against higher highs on prices, or you can have equal highs on the indicator as long as prices are making higher highs. That's still divergence. The price and indicators are diverging from each other. And that's it. So all we need is a little catalyst there in the form of a breakdown, a sell signal, and ideally you want to see an impulsive drop, and especially if you get a solid 60-minute candlestick close down below, that would be a sell signal. Where do we go from there? I think we have the potential to work our way back down here. Price action's been strong recently. That would be a pretty decent drop, talking about 4% or so. But again, it's kind of in line with what we've seen here. That last one there was about 4% as well. So, and you also have a nice support level below. I'm going to round that number off for you. It's just easier to remember, 223. All right, and let's look at SPY. SPY, same, actually not the same chart, a little bit different. These two have kind of been doing their own thing recently, but this is a nice clean chart. This one says a lot to me. Same trend line, October 3rd lows. That's the significance here, these trend lines. On SPY, remember QQQ were well above that trend line, and I said, well, I think we're going to come and visit that trend line sooner than later. Even if the longer term trend remains intact. We'll see. If that trend line breaks, that's going to change things. That's going to be a pretty significant technical event. On SPY, we already had that trend line breakdown, and what we're seeing right now is a back test. SPY started back testing it from below here and did it again today, and in doing so, I'm going to just move these divergence lines. As I said, the charts are, so I often say the charts are dynamic, and so is my analysis. So you have at this point in time, little small divergence here, and so, well, TA 101 or trading 101, it says when you have a trend line and you get a sell signal triggered, in this case with the divergent high, you have an objective shorting op at the time of the breakdown, and if you get a back test of the pattern or the trend line from below, that is also an objective shorting entry. Now we could climb higher, but being that we're back testing now, if QQQ breaks down tomorrow, let's say, then that would most likely bring SPY down, and what you want to see after a back test is an impulsive rejection. See, the problem about shorting back tests is that security can continue to backtest for a while, and even then there's no guarantee that if it keeps backtesting for a while it won't pop back up and regain that trend line. So what you want to see is an impulsive rejection off the backtest, and again that would likely coincide with a breakdown of QQQ. So now I've just spent better than 5 minutes talking about potential breakdowns, potential sell signals where we might be going. Most important thing, we do not have a sell signal. SPY gave us one here, but now it's back testing and it's not, it's walking up. It's made new highs. And more importantly, the leading index, the one that to me makes a bigger difference, is QQQ. It has those, it's chock full, top heavy on those market leading FANG stocks in technology. So that's, in my opinion, why we had a clean sell signal on SPY, but it didn't continue lower or much lower for two reasons. And I also pointed this out at the time. We had positive divergence right there at support. That was a target right there, 320.34. So that was just a pullback to support. Put in a divergent low right here, and that divergence, remember, small divergence played out for so far a small rally. Big divergence, which is still building here, could play out for a bigger correction, but we'll see. We need that sell signal first, and if we get it, let's see how impulsive the selling is, and that might then, like I said, we'll just have to chart it as it goes. Otherwise, no sell signals, it's more of the same. Groundhog Day. You look out, poke your head out, the groundhog doesn't see a shadow, 6 more weeks of winter, whatever it is. Same thing with this. We don't have sell signals. We go up and we I'll do a video 2 days, 3 days, a week from now, and highlighting the next levels to watch. Finally, we'll wrap it up here. A quick look at the futures. NQ, NASDAQ 100 futures. You definitely want to keep an eye on those. And what's nice too is they can, they'll trade virtually around the clock. So what you have is this uptrend line to watch right here, and it's going to be obviously comparable to QQQ. It's the same index. You're just seeing the futures trades here, and you can see here we go, a little diverging. We had little small divergences right here. See a small divergent high at this point, small correction. Here we had a little bit bigger divergence, and it continues. It's not that it hasn't played out. Well, it hasn't played out yet, but it has not been negated or taken out. We had a little blip there, but we're continuing to walk up. And as I often say, and it bears repeating, I can't say it enough, divergences are not sell signals or buy signals if they're bullish divergences. They're merely indication, kind of heads up, that tells you, hey, if this trend line breaks, we'll probably have a decent correction. You can see some levels right there to target, near-term levels, and I think we'll take break of that trend line and a solid sell signal on that 60-minute QQQ chart that I just showed should take us down here. But again, I list these multiple targets because those are support levels, and so breakdown, I'd put good odds on a bounce off 94.71. That's nice, very nice short-term support. We consolidated here for a while, and then we broke out. It was impulsive. So that's NQ, levels to watch, and then the way it works is if that line does break, and if we do hit 94.71, whether we bounce or not, the next sell signal comes on a solid breakdown below 94.70 or so, and so forth and so on. ES, and then we'll wrap it up. ES is are the S&P 500 E-mini futures, and you can see comparable wedge to that NQ I just showed you. There's your divergence lines right there. That red level is the extreme, the high end, the overbought conditions in ES that usually is a heads up that, hey, probably going to get a pullback when you hit that 87 level. Remember, on most charting platforms, they're going to give you a red line at the 70 level, but as I often say, you have to customize that. And I'm using an RSI 9 here. Sometimes I'll use an RS 14. That might confuse you guys, but they're going to be very similar. But you just want to have a heads up in the near term. When you get to that level, you usually get pullbacks, as we did here. Hit a little pullback there, a little pullback there. But what happens is sometimes you hit it and then you start diverging off of it. You make lower highs, and that's what we have here, and that leads to the bigger corrections. Usually the initial blips during a strong uptrend, you get the little pullbacks like you had on these past couple down here. But when you start seeing a series of lower highs, that's when you want to look out for the bigger drops. And then of course you need to break support, and you have that yellow trend line here. You have a little minor trend line here that could do the trick in the overnight session tonight or tomorrow if we break that minor trend line, but you want to see that yellow trend line go, and then there's a couple levels for you to trade off of there. Okay guys, we'll wrap it up here, and again, I may have just spent the last 10-15 minutes on the indexes talking about things that may never happen. So like I say, setups, support levels, resistance levels, chart patterns, there's a difference of a potential setup or levels to watch that may trigger a sell signal or a buy signal, and actual buy signals and sell signals. So we don't have the sell signals yet, but from the look of the charts, probably coming soon. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.